Now, sir, what is FR? What is there to study in FR? If you ask, we can say in group 1, in group 1, when we compare the old syllabus and the new syllabus, if we are going to do a comparison between old syllabus versus new syllabus, this is one paper that has undergone substantial change. It is not a minor cosmetical change that has happened to FR. FR is one paper that has undergone a substantial change. That is because of migration from accounting standard to Ind AS. So what is there in your syllabus? If you ask, sir, in your syllabus, what is there is Ind AS is there. There is nothing else. Out and out, it is Ind AS. You don't have to learn anything else. Okay, there are two small areas which is other than Ind AS, like the corporate social responsibility as well as integrated reporting. Other than these two small areas, it is out and out Ind AS. So what is there in your syllabus? It is Ind AS. Sir, is Ind AS similar to the accounting standards that we have learned in our CA intermediate? No. Ind AS is not similar to accounting standards that we have learned in CA intermediate. So because of this, there is a huge shift that has happened. Huge shift that has happened. So that way, we can say that if you compare the old syllabus and the new syllabus, out of first 4 papers, that is paper 1 financial reporting, paper 2 SFM, paper 3 we have our auditing as well as then we have law. Out of all the 4 papers, sir, this particular paper has undergone a tremendous change. That is one thing. And I can say that when you compare the problem paper, that is SFM is one problem area and FR is also obviously number crunching it is. There are concepts involved, there are descriptive also, quite a bit of writing descriptive answers needs to be given. But otherwise we can say accounts means generally in our mind, sir, it is number crunching. So number crunching wise, now this is very big, voluminous. It is voluminous. Okay. When you compare with SFM in our institute ICA module, if you have enrolled for the course, maybe SFM you will be having only one textbook. As per our revised textbook, we have only one single textbook for SFM. But for FR, if you have got your textbook and if you have opened your textbook, you will acknowledge that you have 4 volumes. For FR, there are 4 volumes. So this is lengthy. FR is lengthy. Okay. By no means it can be finished in a few sessions. You will have to invest considerable amount of time, and because we are doing Ind AS, which is not exposed in CA intermediate, we have to start from scratch. We'll have to start dig from the fundamentals. Only then we'll be able to have a absolute clarity into what is happening and how it has to be presented. What is the difference when compared to our accounting standards? So if you ask me, sir, is this an easy paper? Sir, conceptually, it is easy only, but it is voluminous. So in terms of volume, how do I rate the paper is, if I look the entire CA syllabus, CA final, I would say the most voluminous paper would be DT. That is what my perception is. DT is the most voluminous paper. That is in group 2. And after DT, if you come, then it will be FR. That is how I see it. Okay. So DT, I say that most volatile and most voluminous paper. Then comes financial reporting. In group 1, it is financial reporting, the most voluminous area. So that way, systematic preparation is required, especially for people who are preparing for examination. That means November examination. You have to systematically prepare along with the sessions. That way, your preparation will be taken care. So comfortably, once the batch is over, almost your preparation will be over. So during your study leave, that means maybe August, September, October, the 3 months or 3.5 months study leave, whatever you have, you can properly do revision. You can properly do revision. uh, don't think about sitting for preparation during that 3 months time. So depending upon your both groups target or single group target, there will be considerable other papers to be learned. You will have to prepare for other papers also. So people who are preparing for November examination, I request that you should do your preparation simultaneously along with classes. Now try to attend all the sessions live, so that way you will be updated. If you are not able to attend sessions live, there is no problem. Backup lectures will be available for you guys. So that way, due to certain emergency, due to certain office assignment, if you are not able to attend any of the sessions, need not worry. The sessions will be available as backup against your login. Okay, in your Logic eLearn platform, all the sessions will be updated. Like maybe today's session will get updated by evening. Okay, it won't get updated by morning itself. It will get updated by say afternoon, evening. The session will get updated, so you'll be able to see it, and it will be chronologically numbered also. Class 1, class 2, class 3, class 4, and we'll try to give certain description as to what has been taken. Okay, which standard is being discussed. So that way it will be easy for you to identify. Chronologically, it will be numbered. It will be easy for you to identify. Now, sir, if you ask what will be the duration of this particular course, FR, it is going to be around say 180 hours old. Okay, it will be more than 180 hours. It is not going to be less than 180 hours. It will be more than 180 hours. So that is where we say that the volume comes into picture. Sir, can you shorten the duration? Definitely. If you don't want me to explain for 180 hours, then definitely I can shorten the duration. Then what to say, I don't want to compromise on any of these areas. That is the reason why we have planned for 180 hours plus. So definitely each and every area will be covered in class itself. Everything positively can be learned from class. There is nothing like you'll have to go back home and prepare. So if you attend all the sessions properly, systematically, your preparation, first stage of preparation happens from class. Now, how is that we'll be doing our classes? You will be given textbooks. That means textbook predominantly, which is ICI based textbook only. But I have customized it, whatever is relevant, RTP, MTP, whatever things needs to be brought in, I've brought in. So we'll be giving you textbooks again similar to the ICI textbook. This textbook will also be around 3 or 4 volumes. I haven't decided how many volumes. Uh, we can make it 4 volumes, we can make it 3 volumes. So depending upon the thickness, so we can say, to be on a safer side, we can say around you will be having 4 volumes. So there will be 4 textbook that will be given to you. So our preparation will be based on that 4 textbook. Out of that, first textbook will be made available to you by the end of this week. Okay. So first textbook will be made available to you by the end of this week. By the end of this month, the remaining textbooks will be made available to you. So that is what I am planning. So first textbook will be available by the end of this week, and by the end of the month, remaining textbook will also be available. So we can plan to courier all those things. If you can come and collect, definitely you can come and collect. Else, if it is not possible for you to come and collect, then we can arrange to courier the textbooks to your place. So is this point clear? Okay. Next, now if we check our ICI website, so this is your ICI website. We are into final new course page. I think you can see. Can you please confirm whether you are able to read what is there on screen? Okay. So this is your paper 1, paper 2, all the papers. Now, if you go to a paper, this is the revised syllabus. This is the revised syllabus applicable for financial reporting. So, if you see the content, the first content is framework. Now, that has undergone a change. It is no more known as framework for preparation and presentation of financial statement. It is a conceptual framework for financial reporting under Ind AS. So, there is a change that has happened to your content number 1. Instead of framework for preparation and presentation of financial statements, there is a change and it has become conceptual framework for financial reporting under Ind AS. In the subsequent page, you will be able to see the amendment that is there. And the second thing is application of Ind AS. Various Ind AS they have categorized. First time adoption, Ind AS, that is balance sheet based, income statement based, assets liabilities, all those things, different types of Ind AS is given. Third part is your, you will acknowledge in your intermediate, the main two topics in group 2 is what? Amalgamation and consolidation, isn't it? In group 2, you have main two topics. One is consolidation, one is amalgamation. So these two areas are again coming. But as per Ind AS, it is not as per our accounting standard. So there is a change there. But that area is still there in the syllabus. So that is third area. And fourth area is accounting and reporting for financial instruments. Now we need to understand one thing. Financial instrument is one Ind AS, but it is given huge importance here. Okay, it is one Ind AS only, but it is treated as a separate chapter itself. So it's a very important topic. So financial instrument and business combination and consolidation, again it is one Ind AS. Actually, it is not one Ind AS, there are 2 to 3 Ind AS, but again a cluster of Ind AS which is based on consolidation and amalgamation. And finally, you have these two. Sixth and seventh is the integrated reporting and corporate social responsibility. Those other than Ind AS, something that we are learning, that is, these are the two areas. Otherwise, what is there in the syllabus is 100% Ind AS. Now, you can see that in the textbook, the latest textbook anyone is having. So I believe that those people who are preparing for November, maybe you would have got your textbook, say, 1.5 years ago, isn't it? So don't base your preparation uh, on based on the textbook. Clear? There will be changes. So you are supposed to look into this particular textbook. So those people who are preparing for November uh, 22 examination, this is the revised textbook. Okay. So where you can see that first chapter, there is a conceptual framework is there. Sir, in what way it is different? And they are not going to test you questions on conceptual framework, but there are minute changes here and there. There is a terminology changes. So all those things will be there. Otherwise, questions wise, it is almost in all chapters, what has been added is certain questions, or we can say what has happened is the previous RTP, MTP questions will be brought into your study material. And why do I say you need not prepare based on the textbook that is there given 1.5 years ago is maybe certain answers institute would have updated. So that way there were initially certain wrong solutions which was updated. So need not learn those wrong answers. We can learn the updated answers. So that way this is the latest module that you should be doing your preparation from. Need not worry, I will give you the textbook so that we'll be supporting you with module. So that way you will be having the module, but still I would say whatever module, whichever teacher gives, it is not a substitute for ICA module. If you ask, sir, which is the module I should refer as, sir, definitely the classroom module is given for that, so that you can easily understand the subject. But if you want to refer, definitely you have to refer ICA study med itself. I am not saying that whatever module that I'm going to give you, the module I said first volume will be made available by the end of this week, and another 3 more volumes will be made available by the end of this month. I wouldn't say it is a substitute for ICA module, but I can say almost 90-95% of what is there in ICA module has been covered. So that we have done the homework. Okay. But again, if you want to go through the ICA module, definitely you are free to go through the ICA module. Ensure that everything is in order. Ensure that all areas which has to be given importance have been given importance in classroom. So that way, but still I'm not saying the textbook that we are giving is a substitute for ICA module. So there are 4 volumes. Now coming to your examination, let's see an examination paper and decide. First paper, this is the latest examination paper which is there on the website. So if you see this particular examination, we can see that this particular examination paper is having 16 pages, maximum 100 marks. And if you see that the question number 1 is compulsory, and candidates are also required to answer any 4 questions from remaining 5 questions. So in total 6 questions will be there. Out of that, question number 1 is compulsory. Then we have another 5 more questions. You are supposed to write any 4 questions. So one question you can leave it as an option. Okay. Every question will be 20 marks each. So it is not a 5 questions. Expect around 15 to 18 questions in examination. 15 to 18 questions will be tested. Okay. That is what you should be writing within 3 hours. 15 to 18 questions. If you see question number 1, you have a 12-mark question. Also, you will have if it is 12 mark, maybe 8 mark another sub question will be there. So 20 mark. Sir, what can be tested? We don't know. Anything can be tested. So here is what you cannot gain the examination. At least in CA intermediate, we used to say that the first question will be accounting standards. For sure, it is accounting standards. There will be 4 questions. Okay. Intermediate. Here we can't say what will be tested. Now in this examination, in question 1A, it is financial instrument that has been tested for 12 marks. Financial instrument has been tested for 12 marks. So if you say that, sir, I don't like financial instrument, now you will be get caught, because if you don't like financial instrument, then 12 marks is gone. First question, there is no choice. So in certain examination, consolidation happens to be first question, or amalgamation happens to be first question. Certain examination, our Ind AS schedule 3 happens to be first question. Format of balance sheet and P&L. Schedule 3 happens to be first question. So it can be financial instrument, it can be consolidation, it can be business combination, it can be schedule 3, financial statements format. Anything can be tested. There is nothing like hard and fast rule. They are going to test first question, always it is financial instruments. First question, always it is consolidation. There is no such a fixed pattern as far as this examination is concerned. So that way there is absolutely no gaming possible. You cannot say that, sir, this standard I don't like. So anyhow, there will be one choice question. I'll be ticketing it as part of the choice. No. If you are planning like that, almost you are planning to write only 80 marks from examination, because first question, then you will be getting caught in it. So first question, you can see that there are 2 questions, question 1A and question 1B. So 2 questions. Then question 2, you can see there is a 14-mark question. Now this is some business is taking over another business. Sun Limited and Moon Limited amalgamated, and a new company, Sun Moon Limited, they see amalgamation. A Limited is wound up, B Limited is wound up, and a new company, AB Limited, is being formed up. But it is not your intermediate amalgamation that is happening. So whatever you think, oh, this is similar to our intermediate, no, it is absolutely not similar to your intermediate amalgamation. 100% it will. I'll just give you what is a feeler, how this Ind AS is different from your accounting standards. in another 15-20 minutes I will give you what is the difference. So again, question, if you read, it will be similar to your intermediate question. They will be giving some number of shares will be issued, all those things, assets, liability, all those things will be given, and it is a 14 mark question followed by another question. What? Cash flow statement. Cash flow statement 6 mark. So now 4 questions are there. Next question is question 3A, 5 marks. So it's the 5th question, then 6th question, 7th question. So in question number 3, in this examination, there were 3 sub questions. Question number 4, that is 1 sub question, 7, 8, 9, 10. Another 3 sub questions. Inside that, they have given an internal choice. One additional internal choice is given. So 11 questions are there. Then 5th, 11, 12, 13, 14, 15, 16, 17. So if you see in this examination paper, there are around 17 questions tested. 17 questions. So once we say 17 questions, we can say that, sir, 17 Ind AS tested or 17 concepts tested. So somewhere you should be expecting somewhere around 15 to 18 questions, or around 15 to 18 questions. We can say around 18 questions you have to expect in examination. Is this point clear? Now, so if you come to the module, this is our module, first volume. If you come to the module, first itself I have given an exam pattern. Again, these are just average, that is based on my expectation. Sir, what is the weightage that we can give? For schedule 3 Ind AS, we can give around 5% weightage. 5%, maybe 5 marks. Question could be tested. Direct question could be tested. Okay. Financial instruments, around 15% weightage can be given. In the previous examination that we have seen, a 12 mark question was tested. Consolidation, business combination, have given a 20% weightage. So here you can see there is a 5% weightage. Financial instruments 15% weightage. Consolidation, business combination 20% weightage. And share based payments, around, expect around. Share based payment is also there. Share based payment, to a great extent, whatever you have learned in intermediate only, but intermediate we haven't learned the entire area. We have learned one part of the discussion alone, ESOP alone. So there are other areas that we have to learn. 8% weightage we can give. Lease, the new standard, that is a new standard in Ind AS 116. Out of all the standards, this is the relatively fresh standard. Okay. This was introduced prior to that COVID, 2019, 2020 only it was. So 2019-20 it is where the standard is introduced. So out of all the standards, is the relatively new standard. Then before that examination term is Ind AS 115. Revenue recognition standard. So almost this put together. So this is Ind AS 1. Financial instrument is Ind AS 32, 109, 107. So there are a set of 3 standards. Business combination and consolidation is Ind AS 103, 110, 111. We have share based payment is Ind AS 102. So almost this put together, it is going to be somewhere around 60 plus, almost 60. Almost 60 is the weightage from these areas put together. Now other area will be 36% other standards. So everything will be important. Everything will be tested. We can't say which is going to be tested. So around 18 questions is what you have to expect. So question paper pattern, and whatever now I'm showing is part of your textbook only. Everything is there in the textbook. Okay, so if you want to write it, you can write it, there is no problem. But otherwise, whatever I say will be written somewhere in the textbook. So question paper pattern, question 1 is compulsory, that is 20 mark. Question 2, 3, 4, 5 and 6, you have to attempt any 4. In one of the sub questions, there will be an internal choice. Now we saw, I think the internal choice, we saw it in question number 5. So generally, maybe in question number 6 or question number 5, you will see an internal choice. So somewhere around there will be 124 marks that will be tested. 124 marks that will be tested. Expect around 18 questions. Expect around 18 questions in examination. So I think this, you are clear. You have seen what will be there. So around 18 questions will be there. 18 questions means 180 minutes divided by 18. 10 minutes on an average for one question. This is what? Obviously, big questions you will be spending more time, but otherwise, 10 minutes. Clear? Or you can say 15 questions, because out of that 3 or 4 will be choice questions. So you will be writing around only out of 18 questions, full questions will be there. You will be required to attempt for 100%, maybe around 15 or 14 questions, say 14 questions. So 180 divided by 14 questions, we say around 12 minutes or 30 minutes is what you can spend for one question. So keep in mind, it is lengthy paper. Now, sir, what is there in our paper? If you see the topics, if we classify the topics, I have written heavyweights. So first thing that we have to learn is schedule 3. Ind AS 1 and conceptual framework. This is the first thing, or this is what we will be learning upfront. Then we have financial instruments. Then we have business combination. We have consolidation, lease, and revenue from contract with customers. These are the heavyweights, very important areas. Around we can expect somewhere around 40 plus from these areas. 40 plus to clear examination. If you learn these areas, at least you should be able to clear examination somewhere around 40s. Then we have challenging Ind AS. Other big or challenging, conceptually challenging Ind AS. We have Ind AS 102 share-based payments. We have employee benefits. Employee benefit is a new standard you haven't learned in your intermediate, so it will be new for you. Income tax, though you have learned in intermediate, the approach was P&L based approach. P&L based approach. You compare what is your accounting profit as per books of accounts, and profit as per income tax, and the difference, based on this difference, you classify into timing difference, permanent difference, and you recognize deferred tax. So it is going to be new. It is not like that. It is a balance sheet approach that we are going to refer to. In intermediate, you would have learned P&L approach. Here we are going to do balance sheet approach. So it will be a new area. First time adoption, obviously it is Ind AS first time adoption. It is a new area. Interim financial statement, no, it is a new area you haven't learned. Impairment, it is a new area you haven't learned. So all these are new to you guys. You haven't learned in your intermediate. So that is why I'm calling it as challenging. It will be first time that you are getting exposed to these standards. And we have other standards like your inventory, your PPE, intangible assets, borrowing cost, government grant, whatever that you have learned, accounting standard, you have learned cash flow statement. So that I'm categorizing into other Ind AS. That means almost you have learned at least the corresponding AS you would have learned. Corresponding AS you would have learned in CA intermediate. So these are the other accounting standards. Then we have other topics like corporate social responsibility and integrated reporting. So this is what is your syllabus all about. This is what is your syllabus all about. This is what you should be learning in your whatever that 180 plus hours of classroom lecturing that we will be doing. This is what we should be learning. And based on that, you will be having an examination. examination will be for 3 hours. You will be required to write somewhere around 15 questions. There will be around 18 questions in examination. You are supposed to write somewhere around 14 to 15 questions, where a single question you can spend around say 12 to 13 minutes of time. So that is in nutshell what is there in your paper. Is this point clear? This module, whatever that we have taking this module, around we have around 90 pages. So this will be uploaded into your e-learn platform. This will be uploaded into your e-learn platform today itself. If you want to see this, you can see this today itself. But hard copy wise, you will be getting maybe uh, uh, by the end of this week. We should be thinking about all the printing, everything should be over. So anyhow, by the end of this week or by next week, you will be having this hard copy in your hand. And so that once you attend the live sessions, you will be able to mark it in this particular module, and whatever I want to dictate, I have included in this. Okay. So considerable amount of writing, all those things. If you want to write running notes, you can do that. Otherwise, whatever I want to dictate, I have included in this particular module. So that way, if the module is there, then based on the module, you should be able to do your preparation. Now, so what is there in the syllabus? Ind AS is there in the syllabus. Now we'll come to Ind AS. Sir, what is Ind AS? It is nothing but Indian accounting standards. These are based on IFRS. These are based on IFRS. Okay, because India in 2006, India said that India will be converging our accounting standards so that it is similar to IFRS. So we have gone for which mode of, we have gone for convergence. We said that we are not going to adopt IFRS just like that. We will converge. We will ensure that our accounting standards will be drafted in such a manner that it will be in similarity with, or it will be similar to IFRS. So if you see IFRS today, there are two series of IFRS that is there. There are two series of IFRS. What are the two series available as of day? You have IAS series as well as IFRS series. IAS series is nothing but standards issued by International Accounting Standards Committee. Earlier, the organization was known as International Accounting Standards Committee. So, in the year 2000, this committee was reconstituted and it was formed IASB, International Accounting Standards Board. So, once IASC was into picture, they had issued IAS 1 to IAS 41. These were the standards that were there up to year 2000. International Accounting Standard, IAS stands for International Accounting Standards. International Accounting Standard 1, 2, like that until 41 was available. Now, once a new body was constituted, what they said that we will take exactly. So, IFRS, the new body said that I am not going to issue all the new standards. Whatever our predecessor, that is IASC, have issued, we are going to accept. So, we will have all the standards. So, all standards. So, IFRS has all the standards they have accepted. So, these standards are there. These standards are there. And what did our IASB said? Now, from here on, if we issue any standard, we will call it as IFRS. So, the new standards that will be issued from year 2000 is known as IFRS. So, once we say IFRS, need not feel that IFRS refers to this standards alone, the new standards alone. So they started issuing IFRS 1, IFRS 2, like that. Now in picture there are IFRS 16 until IFRS 17 is also in work in progress stage, but we can say, okay sir, properly we have until IFRS 16. So once we say IFRS, there are two streams of standards or two series of standards. What are the two series of standards? We have IAS series, International Accounting Standard. IAS stands for International Accounting Standards. Now what has happened? The only change that has happened is international is there, standard is there. Instead of accounting, they have replaced the word. Accounting has been replaced by financial reporting. So the new set of standard is nothing but international word is there. Standard is also there. So instead of accounting, what is the new name? Financial reporting. On a lighter sense, we can say that, sir, when we learned our intermediate, what was the name of the chapter or paper? Tell me. Intermediate, what is the name of your paper? Paper 1 and paper 5? Chat box. Paper 1 and paper 5, what is the name? CA intermediate. Can you respond? Paper 1 and paper 5. Are you there? Accounts. But come to CA final. What is the name? Come to CA final. What is the name? Is there a chapter? Is there a paper by name accounting? Is there a paper by name accounting? No. The name of the paper is what? Financial reporting. The name of the paper is financial reporting. Because what is happening here is, see, if assume that we are taking a standard that is accounting standard 20. Tell me, sir, what is there in accounting standard 20? Can anyone tell me what is there in accounting standard 20? Intermediate stuff only, not final stuff. Accounting standard 20. Do you remember? Anyone? If you remember, can you please tell me what is accounting standard 20? If you want to refer and tell, you can refer and tell. Otherwise, can you give me your response? What is there in accounting standard 20? Earnings per share. Very good. It is earnings per share. Is there any rules of debit and credit in that particular chapter? In that standard, are you doing any kind of debit or credit? Is there any accounting that you are doing? No. Can I say that that standard is pure disclosure? Is that standard pure disclosure in nature? Is that standard purely disclosure in nature? So, does all accounting standard has accounting in it, or there are certain standards which are disclosure in nature? So, there are certain standards which are purely disclosure in nature. There are no accounting prescribed. So, internationally, they felt that you cannot call it as accounting standards because there is no accounting prescribed in every standard. There are certain disclosure standards. Therefore, we will go for new terminology. It is financial reporting. Financial reporting. Is that okay? So, they have used a new terminology instead of accounting. They have used a new terminology, that is financial reporting. Now, you tell me, what do you think? We know that Ind AS is based on IFRS. IFRS has got two streams, that is IAS 1 to 41 followed by IFRS 1 to 16. 17 is in work in progress stage, and even if 17 is been Released also, it won't be there in our syllabus. That is purely for insurance sector, which won't be there in our, it is an industry specific standard which won't be there in our syllabus. So those people who are preparing for November 23 exam or May 23 exam, okay, as you need not worry that, oh sir, tomorrow if IFRS 17 is introduced, though India will have a corresponding standard, so should we learn anything new? Need not worry. If that standard comes into picture also, it won't be there in our syllabus. It won't be there in our syllabus. So that way you're safe. You're safe. Need not worry. Okay. So let that standard be introduced. There is no problem in our syllabus. There is nothing going to happen. Now tell me, give me your response. If you feel that, or if you have observed that IFRS has got two streams, that is IAS and IFRS. Our Ind AS, does it have one single stream or will have two series? What is your thought process? Our Ind AS, does it have only one series or there will be two series? Give me one or two series. What are your thoughts? What are your thoughts? Ind AS will have only one series or two series? Ind AS also have two series. Ind AS has two series. That is how we have done it. I'll say it is like this. Sir, Ind AS, there are two series. The first set of series is from Ind AS 1 to, say we can say 99, that one series is there. Obviously up to 99 is not there. So we can say Ind AS 1 to 41. If I follow that previous series, Ind AS 1 to 41. And instead of IFRS, instead of calling it as separate, we have a series. In terms of numbering, we have done a series. That is Ind AS 101 to 116. Have you understood? So we haven't given two names. It is Ind AS only. But 1 to 41 is one series. And all other corresponding IFRS is from 101. So 3-digit numbering and 2-digit numbering. Do you get that? We have 2-digit numbering series as well as 3-digit numbering series. Is this point clear? We have 2-digit numbering series as well as 3-digit numbering series. Out of that 1 to 41, any new standard that is going to get introduced will be a 3-digit numbering. Is that point clear? So can you tell me if there is a new standard introduced? I said the new standard, the WIP stage is known as IFRS 17. Can anyone tell me, once the standard comes to India, it will be known as, once it comes to India, it will be known as, can anyone tell me? Once this IFRS 17 comes to India, it will be 2-digit numbering or it will be a 3-digit numbering? Obviously, very good. So it will be Ind AS 117. So any new standard that will be introduced will be given the 3-digit numbering. Is that point clear? Is this point clear? So 1 to 41 is freezed. Sir, this is freezed. It is not going to change. They are not going to introduce 42. Why? Why 42 will not be introduced? Sir, any new standard that will be introduced by IASB, the new standards will be introduced by IASB. Whatever standard IASB is going to introduce, they are going to give numbering 1, 2, 3, 4, 5, 6, 7. It goes 17, 18, 19, 20. They are not going to give any number that is 41 or 42 here. So we'll continue. So what we were discussing is, all the new standard issued by IASB will be given which numbering? IFRS 1, 2, 3, 4, 5, 6. It is going to go consecutively like that. So none of the standard will be issued with IAS series anymore. So we can say that these standard up to 1 to 41, it is fixed. The new standards will be from 101 and now it is until 116 is there, 116 is there. Clear? Now, what happens, sir? Now what institute is doing, as internationally what happens is, they are revising this old series of standards. They are revising, they are taking one standard, removing from this and introducing as a new standard. Clear? Say for example, earlier there was a standard for lease. Earlier, there was a standard for lease, that is 17, IAS 17. They removed that standard. They removed that standard and they reintroduced. And they reintroduced. They removed that standard and they reintroduced as a new standard. They removed that standard and they reintroduced as a new standard as IFRS 16. So, what is the project going on? The project going on is whatever old standard is there. If there is any deficiency in the standard, we will take it up. We will do a scrutiny analysis and we will remove from IAS series and we will introduce a fresh series. Is that okay? So, as we proceed, as days pass by, maybe 10-year or 5 years down the line, what we'll observe that certain standards from this series will get deleted up to 1 to 41. Various standards will be deleted. Certain standards will be deleted and new standards will be introduced here. Have you understood this? So in India, we have got two series in the sense in terms of numbering, 2-digit numbering and 3-digit numbering. So 2-digit numbering is from 1 to 41 and 3-digit numbering today presently we have from 1012 to 116. 1012 to 116. Now you need not think that, oh sir, there are 41 standards here and there are 16 standards here. Okay, there are 41 and 16. There are around 57 standards. No. Don't think like that. There are no 57 standards and all. Okay. Out of this, many standards are deleted. Out of this 1 to 41, many standards are deleted. Many standards are deleted. So it is not that you have to learn 41 standards. Is this point okay? You don't have 57 standards to learn. You need not learn 57 standards. Give me your confirmation. So we can say that Ind AS 1 to 41 series of standard is there. Ind AS 101 to 116 series of standards. So this is part and parcel of your curriculum. This is what you have to learn in your curriculum. So can you give me your confirmation, please? Okay. Now if you see, sir, what is when we compare our AS with Ind AS, or for that matter Ind AS or IFRS you can call, there is no problem. What is the difference? When we compare AS with Ind AS or IFRS, so what is the difference? What we can say is, sir, in Ind AS or IFRS, in Ind AS or IFRS, more focus is given for substance over form. More focus is given for substance over form. So in Ind AS or IFRS, more focus is given for substance over form. So can you please give me what is the difference? Substance over form, because in our 11th standard, once we started accounting, we learned that accounting as per American Institute of Certified Public Accountants, blah blah blah, we have learned. In that we have learned all the substance over form, all this. We have learned the substance over form. Sir, how is different from what we have learned in 11th standard? But the problem is 11th standard you have learned the substance over form. as a small theoretical discussion, isn't it? As a small theoretical discussion, maybe first few chapters you have learned certain theory areas, you have learned, you have and forgotten what was learned. Now here practical relevance is given more importance. Example, amalgamation. Recall, let me bring this concept here. CA Inter. Can you tell me what are the different types of restructuring that you have learned in amalgamation? Different types of restructuring, business restructuring. I want your response, sir. Give me different types of restructuring that you have learned. You would have learned amalgamation. You would have learned absorption. You will have learned external. Can you complete it? External. External. Can you help me out? I forgot. What is that? External. Reconstruction. Very good. Okay. Now tell me what is amalgamation. Can you tell me what is an example for amalgamation? Actually, we read it in question paper. 10 minutes ago, we saw it in question paper. What was amalgamation? Can you tell me what is example for amalgamation? What kind of a restructuring is happening in amalgamation? How many selling company? How many buying company? Can anyone tell me? Sir, in amalgamation, there are two old companies. A Limited is there. B Limited is there. Both A Limited is going to get liquidated. B Limited is also going to get liquidated. And a new company is going to get new company. C Limited is going to get created. Isn't it? Tell me. Isn't it? There is amalgamation A Limited, B Limited. Both A Limited and B Limited going to get liquidated. And a new company C Limited is going to get created. What is absorption? Similarly, can you tell me what is absorption? Sir, there is A Limited. There is B Limited. A Limited took over B. So B Limited is going to get liquidated and A Limited will continue. A Limited will continue. Similarly, can you tell me what is external reconstruction? What is happening in external reconstruction? Sir, there is one company A Limited. That company will get liquidated and a new company, new A Limited is getting formed. Tell me. And we generally say that sir, some cosmetical changes happened. It is same company only. Some cosmetical changes happened and they say that it is new A Limited. The same company in a different name they are coming. Tell me, is that the example that every teacher uses in classroom? What is external reconstruction? Sir, you are your same person. You do some kind of cosmetic surgery. Everyone feels that you are a different guy, but you are the same guy. Okay. Cosmetic surgery happened. Externally, the name changed. Everything is exactly same. Tell me, sir, is that external reconstruction? Now let's come to substance of the transaction. Think about external reconstruction. Assume that A Limited is there. A Limited shareholder, the owner of A Limited is whom? Mr. A. Now you tell me, in external reconstruction, who is the owner of new A Limited? Who is the owner of new A Limited? Who is the owner of new A Limited? Tell me, new A Limited. Who is the owner of new A Limited? There was a company A Limited. The shares were held by Mr. A. Now a new company is getting formed. Say New A Limited. Who is the owner of New A Limited? Tell me, who is holding the shares of New A Limited? Who is holding the shares of New A Limited? Something that you have already learned in your intermediate. External reconstruction. Who is the shareholder of New A Limited? Is my question. In external reconstruction scheme, who is the owner of New A Limited? Is Mr. A itself? It is Mr. A itself. At least that is what we have learned in, at least this is what we have learned in our intermediate. The same company will give equity shares to old company. New A Limited will give PC to shareholders of A Limited, isn't it? A Limited, New A Limited will give PC. A new A Limited started, they'll give PC to shareholders of A Limited. So actually I am the shareholder. I relinquish my shareholding in A Limited. Now I become shareholder of New A Limited. Now tell me, sir. Now apply substance of the transaction. Sir, who is purchasing whom? Can you tell me? Is there any change to the ownership that is happening? Is there any change to the ownership that is happening? Earlier also it was my company. Now also it is my company. Only name alone has undergone a change. Name alone has undergone a change. So tell me, sir, is that a book transaction that has happened? There's a book transaction that has happened. Is there any change to ownership? Is there any business acquisition happening? Is there any business acquisition happening? No, sir, there is no business acquisition happening. What amalgamation, what kind of a restructuring are you referring to? There is no restructuring, sir. Name alone changed. It's the same house. It is the same house. Earlier, the house was given the name. Say, uh, uh, say, White House. Say, assume that earlier the name of the house was White House. Now he just went out and he said that no, the name is not White House, it is Black House. It is same house. You are the same owner. Earlier also you are the owner. You have just changed the name of the entity. They say that, sir, there is no acquisition happening. You shouldn't do accounting like this. This is a case of common control transaction. What? Common control. It's a case of common control transaction. I think the name is self-explanatory. I think the name is self-explanatory. Common control. Earlier also you were the owner. Now also you are the owner. So there is no change in ownership. It is a common control. You were earlier the owner of A Limited. Now A Limited has officially such a company is not there. Now there is a new company, New A Limited. You are the owner. So it's a common control. There is no change in ownership. There is no business acquisition that has happened. But tell me, sir, absorption. Tell me, absorption, is there a change in ownership? Earlier B Limited was, there was a shareholder B, but now everything A Limited has absorbed it. A Limited has absorbed it, isn't it? Now who takes decision with respect to B Limited? Earlier, entire decisions with respect to B Limited was taken by Mr. B. Now you can say that, sir, in our amalgamation question, we have given PC in equity shares. We have given PC in equity shares. So I'm going back to your fundamental root level. So A Limited took over B Limited. Sir, A Limited is having equity shares, 100 shares. B Limited is having equity shares, 50 shares. Okay. A Limited took over B Limited and PC is given in the ratio of 1:1. A Limited issued shares in A in the ratio of 1:1 to shareholders of B Limited. So tell me, sir, how many shares should A Limited issue to B Limited? 50 shares. Now you have a company A Limited. Inside A Limited, assume that there are two shareholders. There are two shareholders. Tell me, there is Mr. A. Mr. A is holding how many shares? In A Limited, Mr. A is holding how many shares? Mr. A is holding how many shares? 100. Okay. There was Mr. B. Now this guy is coming to Miss A Limited, isn't it? He's not going out. PC is not given in cash. PC is given in shares. So Mr. B is coming to A Limited. He's been invited and he's given how many shares? He's given how many shares? 3 shares. So in A Limited, in total, how many shares are there? How many shares are there? 150. So Mr. A is holding how many percentage? Say 67% roughly. He is holding 33%. Am I right? Now tell me, sir. Now, any decision with respect to B Limited. Say there was a company B Limited. Now the company is getting closed. But what to say? Any decision with respect, assume that the company is still there. Assume that now every decision of B Limited will be taken by whom? Assume that that company is still there. Assume. But decision will be taken by whom? Because in the combined entity, Sri Lakshmi, you are saying A and B. No. Sri Lakshmi, A and B is not taking decision. B is just a shareholder. If B decides anything, will the resolution get passed? Think about it, Sri Lakshmi. I am a shareholder of Infosys. I am holding 10 shares, but can I decide anything for Infosys? Okay, I can go and attend AGM. I will get dividend. But if a resolution needs to be passed, if I decide, can I say that my decision will prevail over others? No. If a resolution is going to be passed, if A will have to decide, whatever A decides, resolution will be passed in favor of A, isn't it? Think about it, Sri Lakshmi. Will both of them decide or A alone will decide? Both of them decide or A alone will decide? So can I say that there is a change in ownership? There is a change in ownership. Earlier, B limits its 100% decisions were taken by whom? Earlier, B limits its 100% decision was taken by whom? B. Now, because of this absorption, now every decision of that particular business will also be taken by whom? A. So is there a change in ownership? Is there a change in ownership or is there a common control? Is there a change in ownership or is there a common control? Is there a change in ownership or is there a common control? I want everyone to tell. There is a change in ownership. There is a change in ownership that has happened. Now this is absorption. This is business combination. This is acquisition happening. Now there is a business. Now we can say there is business acquisition done by Mr. A. Now I can say that there is an acquisition that is done by Mr. A. In my first story, sir, Mr. A was the owner of A Limited. Mr. A is the owner of new A Limited. Is there any business acquisition done by Mr. A? In the first story, there is no business acquisition done by. There is no business acquisition done by Mr. A. Are you able to get? In the first story, there is no business acquisition done by Mr. A. But in second story, there is a business acquisition done by. So are you just looking by the legality? If you are looking by the legality, a new A Limited acquired A Limited, isn't it? Substance of the transaction, rather form, legal form. If you look into the legal form, you say that new A limited acquired A limited, isn't it? That is what you have done in your accounting standard 14. In accounting standard 14, you simply said there is a purchasing company. What is the name of the purchasing company? New A limited. There is a selling company. What is the name of the selling company? A limited. So new A limited acquired A limited. That was your interpretation. But when it comes to Ind AS, they say that, sir, new A limited belongs to the same person. There is no person purchasing any other person. It is the same company, just cosmetical change alone. There is no acquisition that has happened. But in second story, yes, sir, there is an acquisition. There is A limited acquired B limited. True, there is an acquisition that has happened. There is an acquisition. Can you see the difference? Can you see the difference? Again, let's dig deep into this particular concept. Again, we are into which area? We are into which area? We are trying to explain in what way our Ind AS or IFRS is different from AS. We have said that in Ind AS there is greater emphasis given for what? Greater emphasis given for what? Substance rather than legal form. Okay. Now another, assume that PC is given in cash. Tell me, sir, A limited took over B limited. PC is given in cash. If PC is given in cash, you tell me, will Mr. B there inside this company? Mr. B, will he go outside or will he come inside A limited? Mr. B, tell me, sir, will he go to the left side or will he go to the right side? Will we go outside or will he come inside A limited? He's going to the right side. He's out. If PC is given in cash also, it is an acquisition happening. PC is given in cash also, there is an acquisition happening. PC is given in cash also, there is an acquisition happening. Now tell me, in this context, external reconstruction, if PC is given in cash, then the owner of new A limited will not be, the owner will be some other person. I don't know. If PC is given cash means, maybe there is a new person, Mr. C, has paid cash to Mr. A. Because in typical external reconstruction, PC is given in shares. A limited, whoever is the shareholder, he comes to that particular company, isn't it? That is what happens. If I draw the diagram, it is like this. There is a limited, Mr. A. There is new A limited. What happens? Typically, what happens is Mr. A from this room will come to this room, isn't it? Tell me. Typically, I want everyone to observe. From this room, Mr. A will come to this room. This is external reconstruction typically. But assume that if Mr. A is not being brought in this room, he is given cash. Mr. A is paid cash and is going out. So this company is promoted by some others. It has been promoted by, say, Mr. C. Now there is an acquisition happening. I accept it. There is an acquisition happening. That okay? So there should be an acquisition. Change in ownership is required. Change in ownership is required to call it as business acquisition. Change in ownership is required to call it as business acquisition. Have you understood this? Change in legal. In AS, you are just looking into new company, selling company. You say that this is the purchasing company, this is the selling company. No more you are looking into this. You are looking into the ownership. Who is having control? Another story. There is A limited. There is B limited. A limited took over B limited. Tell me, A limited took over B limited. So who is acquiring whom? A limited took over B limited. Who is acquiring whom? A Limited took over B Limited. Who is acquiring whom? A Limited took over B Limited. Who is acquiring whom? A is acquiring B. Now, in Ind AS, you can't come to such conclusion. In Ind AS, you can't come to such conclusion. Now, you are giving the answer based on legal form, isn't it? Touch your heart and say, you have just said the answer based on legal form. You have just given the answer based on legal form. But Ind AS gives more stress to substance over legal form. So I'm going to bring other stories. Mr. A is having 100 shares. Mr. B is having 150 shares. PC in the ratio of 1:1. Now tell me, sir, which person will come to which room? Who will come from which room to which room? Who will come from which room to which room? You tell me. A Limited took over B Limited. Very good. So which company is going to get liquidated? Sir, B Limited is going to get liquidated. So I am moving Mr. B from this room. PC is giving shares to this room. And this company is going to get liquidated, isn't it? The company is going to get liquidated. Now you tell me, very important question. In A Limited, who is going to take decisions? In A Limited, from now on, in A Limited, who is going to take decision? Because in A Limited, now how many shares are there? There in total 250 shares. So Mr. A is having only 40% holding. Mr. B is having 60% holding. So from now on, Mr. B has control. So tell me, sir, who has acquired whom? Who has acquired whom? Now you tell me your observation. Who has acquired whom? Now I have to say that actually, in substance, we feel that Mr. B acquired A Limited, isn't it? It is Mr. B acquired A Limited. In earlier story, we said that Mr. A acquired B Limited. Earlier story was, I said that A is acquiring B Limited. Now it is actually, though B Limited got wound up, actually B Limited is controlling A Limited. Are you able to get? So again, there is no common control. There is a change in ownership. But legally, we feel that A has acquired B. But actually, A didn't acquire B. It is B indirectly acquired A. The transaction is disguised in such a manner that world over, everyone feels that who has acquired who? World over. If everyone reads it, everyone will understand that who has acquired who. Everyone feels that A Limited acquired B Limited, but indirectly, the scheme is arranged in such a manner that indirectly, who is the ultimate person having ownership, control? B is having control. So is there a change in ownership? Ownership of A has undergone a change. Ownership of A has undergone a change. So there is an acquisition. There is no common control. So again, this is known as reverse acquisition. This is known as reverse acquisition. This is known as reverse acquisition. Are you able to get? This is known as reverse acquisition. Because in paper, we feel that A acquired B. But for the purpose of accounting, substance of the transaction, B has acquired A. B has acquired A. The transaction should have been how much? How it should be? Legally, if I have done it properly, A Limited would have wound up. A Limited would have wound up. And Mr. B would have been here, 150 shares. And A should have come at 100 shares, isn't it? This should have been proper. This should have been proper. B Limited took over A Limited. That would have been proper. But to bring this effect, they have disguised this transaction in such a manner that A Limited took over B. But the actual effect is B is taking over A. Actual effect is B is taking over A. So for the purpose of accounting, you should do accounting in which form? For the purpose of accounting, you should do the accounting in which form? As if B Limited took over A Limited. But legally, A Limited took over B Limited. B as a company does not exist. Does not exist. Have you understood? Now, are you able to pick this particular concept, sir? I understand it is not A Limited taking, it is not the legal form that is important. Substance of the transaction is more important. Like this. So that is the reason why I said that amalgamation, whatever you have learned in CA Inter is not relevant, is not going to help you out. You have to learn fresh. Amalgamation, you have to learn 100% fresh for CA final. Clear? So whatever amalgamation that you have learned in CA Inter is not going to help you out. Over, ignore it, delete it. Delete it. Control delete. Permanent delete. I don't want it to go to recycle bin also. Just control and delete. Permanent delete. You have to learn fresh for CA final. And the name of the topic is business combination. What? Another example. Another example. We call it as preference share capital, isn't it? And what happens? Typical in our intermediate and all, you have seen redemption. So we have redeemable preference shares. Redeemable preference shares. What do you mean by redeemable preference shares? Tell me, what do you mean by redeemable preference shares? Redeemable preference shares means you have to repay cash. Company will have to repay cash after certain time. Now in India within 20 years, we have to repay. So you have got money from certain person. Assume that you are a preference shareholder. Mr. A is a preference shareholder. He has paid company rupees 100. And company, what did company say? What did A Limited say? I will repay you after say 5 years. Maybe I'll repay you 110, I'll repay you 100, I'll repay you 80, whatever. Redemption at par, premium or discount, I don't know. But tell me, sir, isn't this redeemable preference share? That tomorrow the amount will be repaid. Tomorrow the amount will be repaid. Tomorrow the amount will be repaid. So is the company under an obligation to repay money? Is A Limited under an obligation to repay money? Is A Limited under an obligation to repay money? Yes, A Limited is under an obligation. Is that a true owner of the company, or is that similar to a loan taken? Is Mr. A a true owner of the company, or is that similar to a loan taken? It is similar to a loan taken. It is similar to a loan taken. Therefore, you cannot call it as capital. How can you call it as capital? It is a liability. So, redeemable preference share is a liability. In Companies Act, it says that it is capital. In Companies Act, it says that it is capital, but it is similar to debentures. It is similar to debentures. It is similar to loan taken. Substance of the transaction. It is a liability. Then tell me, what is equity share capital? Mr. A paid rupees 100 to A Limited. Now you tell me, what did A Limited say? A Limited is the company, received 100 rupees. What did A Limited? Did A Limited give any promise to equity shareholder? Did A Limited give any promise to equity shareholder? Now, today, initial public offer for LIC is coming. The public offer, okay, May 4th. If you want to subscribe to the shares, you can subscribe today. Subscription starts. Okay. Now, I'm going to pay LIC. I'm planning to invest in LIC. Okay. So, when I pay that money, say 950, 980, being a shareholder, you will get some 65 rupees discount. Okay. So, assume that I paid 900 to LIC. I'm directly paying that money to LIC only. Okay, it is a public offer that is happening. It is a public offer that is happening. I think you are aware of. LIC is coming out with a public offer today. The subscription starts, isn't it? If you want to subscribe, you'll have to subscribe today. So those who are planning to subscribe, please do subscribe to the shares. Now coming back, assume that today if I pay LIC 900 rupees, assume that if I pay 900 to LIC, is LIC giving me any promise? Is LIC giving me any promise? No promise. After 5 years, LIC says that LIC will pay me back 100 rupees or 900 rupees. No. No promise. What is the promise that LIC says? When LIC wounds up, whenever the company closes down, after settling all the liabilities, if there is any money, you can take that. Tell me, what does the company say? A Limited says that whenever company gets liquidated, balance after settling all liabilities, if any, if there is any balance, you can take, isn't it? You pay money today, you pay me today whatever money, I am not going to repay you this money. I'm not going to repay. Repayment will happen when my company is going to get liquidated. And is there any fixed money that I have to pay? No, whatever is there, if anything is there, you can take. If nothing is there, you won't get anything. You can come and stand in queue and see, isn't it? So this is the true honor. This is the true ownership. You are taking risk, isn't it? True honor, you have taken risk in that business. You've put your hard-earned money, you don't know what is going to happen. There is no guaranteed money that you're going to get. You have no claim in that particular company. There is no fixed claim. Residual interest. What? Residual interest. Are you able to get this terminology? Residual interest. All you have is a residual interest in the company. Residual interest. This is the true shareholder. This is the true owner. Is preference shareholder like this? Is preference shareholder like this? No, preference shareholders are not like this. They have a fixed claim. They have a fixed claim. 100 rupees means 100 rupees will be repaid. Maybe at par, premium or discount. So they have a fixed claim. There is an obligation to pay cash. Cannot be treated as capital. It cannot be treated as shareholders' funds. It should be treated as liability. Should be similar to debentures. Substance of the transaction. True only. Assume that there are convertible preference shares. Convertible preference shares. So what is the company promising? That tomorrow I will give you equity shares. Tomorrow will give you equity shares. Tomorrow will give you equity shares. So we can think that, okay, sir, at least now it is similar to share application money pending allotment. Think. This shareholder, Mr. He has given you 100 rupees. And company says that after 5 years, I will give you equity share. So isn't this 100 rupees similar to share application money pending allotment? Think. Isn't that after 5 years only share will be given? So isn't that application money pending allotment? Now this can be treated as capital. This can be treated as capital because there is no obligation to pay cash. Now it is similar to share application money pending allotment. Though generally allotment will happen very fast. Here you have to wait for 5 years, 6 years. Okay, fair enough. Similarly, convertible debentures. Generally, when we come across debentures, we feel it as liability. When someone say there is a debenture, we say it is a liability. But if it is a convertible debenture, is there an obligation to pay cash? Or is it similar to, sir, some kind of share application money pending allotment? So we feel that, sir, to some extent, it is similar to application money pending allotment. Is that okay? So what I'm trying to say is, don't go by the name. Maybe debenture, it should be treated as equity. To some extent, it should be treated as equity, part of shareholders fund. Some extent, it will be liability. So we have to look into the substance of the transaction. Look into the substance. Look into the substance. If there is an obligation to pay cash, then it is liability. But if the obligation to issue, if it is an obligation to issue equity shares, then it is equity. It is not a liability. Are you able to get? If you have an obligation to pay cash, you have received cash with an undertaking that tomorrow you will be repaying cash, then it is a liability. They are not your true owners. But if there is an obligation to issue equity shares, then it is equity, part of shareholders funds, part of shareholders, part of shareholders funds. Part of shareholders funds. Are you able to get? To satisfy you for the timing, I can say that it's a kind of what application money pending allotment. You have received money, allotment will happen after 5 years. Kind of share application money pending, but to give you some contextual thought process what. But in detail, this and all we will be learning where? In detail, we will be learning it in financial instruments. In detailed, we have to learn, we have to invest around 30 hours odd to crack what is financial instruments. It's going to take considerable amount of time. Now, so come to the notes. See, what is written? What are IFRS? International Accounting Standards. Financial reporting standards are accounting standards issued by IFRS is issued by, you tell me, IASC or IASB? It is issued by IASB. Old standards were issued by IASC. It is International Accounting Standards. These are principle based. More focuses on substance over form. Greater emphasis on fair value concept. Very important. Fair value concept is given more importance. Judgments are used. Higher disclosure requirements. So inside that, substance over form. What? Redeemable preference share capital. Tell me, redeemable preference share capital. Legally, you call it as capital. But in substance, it is a liability. In substance, it is a liability. Convertible debentures. Sir, convertible. Okay, in substance, a part will be what? Part will be equity. A part will be equity. Now you may have a doubt, sir, why did I say a part will be equity? Because debentures, every year you have to pay interest. Interest will have to be paid how? Interest will have to be paid in cash. Preference shares, there is no concept of preference dividend, because even if it is cumulative or non-cumulative, preference dividend is not mandatory. Preference dividend is not mandatory. You might have a thought process of cumulative means. What do you mean by cumulative dividend? Again, cumulative, the concept is if current year you haven't paid, next year if you want to pay equity dividend, you have to pay 2 years of preference dividend. Always the question is, do you want to pay equity dividend? Only if equity dividend is to be paid, then you have to pay. So assume that 5 years I say that I'm not paying equity dividend. 5 years I'm saying that I'm not paying equity dividend. Only if equity dividend is to be paid, prior to that preference will be given for the other share, isn't it? So if equity dividend is not paid for 5 years, then preference dividend will also be not paid. Though you call it as kept in cumulative arrears, still it won't be paid. But debenture interest is a charge against profit. It has to be paid. So interest will have to be paid in cash. That is a liability. The face value, we are talking about face value. We are talking about that 100 rupees received, face value. That face value will be given in equity share. So that amount, there is a equity portion and interest will have to be paid in cash. So there will be a liability component as well as an equity component. And you have a business combination and asset acquisition. Inside that business combination, I've given you certain other examples like common control transaction. This asset acquisition and all I'll tell when we come to business combination standard. And one more thing, bills discounted. Bills discounted. What do you mean by bills discounting? Have you heard about this concept of bills discounting? Have you heard about this concept of bills discounting? Yes, you have learned. I think maybe bills of exchange is there in your foundation. So you would have learned bills discounting in your foundation, isn't it? What is the journal entry that you pass at the time of bills discounting? Sir, bank account debit, you take to bank, say 90 rupees. Discount account debit, 10 rupees. To bills receivable. Now my question is, have you de-recognized your bills receivable asset? Have you de-recognized the bills receivable asset? Yes. Sir, I've credited bills receivable. That means I've de-recognized. I have de-recognized my asset. I've de-recognized my asset. Now the problem is, can you de-recognize this? Assume that on maturity, the other person is not honoring. Will bank come back to your house? You have received 90 rupees from bank. You have given a bill. Assume that this is bill. Sorry. Okay. Assume that this is a bill. You had the bill in your pocket. You wanted money. You gave this bill to bank. Got money. Tomorrow, if bank is not getting money based on this bill, will they come back and throw this bill to your face and say that you have given me this bill? Give me back my money. Tell me, will bank throw this bill back on your face and ask for money? Definitely. Definitely bank is going to come back to us and bank is going to collect money from this, isn't it? So are you free from all the responsibilities from this bill? Can you de-recognize this particular instrument from your books? Are you free from all responsibilities? Tomorrow the other person does not make the payment, you still responsible to give back money to the bank, isn't it? So you cannot pass this journal entry. This is wrong. This is as good as a loan taken by. It is similar to gold loan taken here. See, feel you have given this paper. Based on this paper, you have taken a loan. Based on this paper, you have taken a loan. This paper has some value. Similar to gold loan. When you go for gold loan, what is the journal entry that you pass? You have gone for gold loan. What is the journal entry that you pass? You tell me. You're going for a gold loan. What is the journal entry that you pass? Sir, bank account debit to gold. Do you pass this journal entry? Do you credit? Do you de-recognize gold from your books? Or do you pass the entry bank account debit to loan account? Which entry do you recognize? Do you de-recognize the asset from your books? Your gold You gave it physically, you gave to bank. Physically, you gave your gold to bank. Do you recognize gold from, de-recognize gold from your books? That is the question. You don't re-recognize. You say that it is my own gold only. It is my own gold. Okay, it is a loan taken. Similarly, this is a loan taken based on this paper. You will de-recognize when the other person makes the commitment, when he honors the commitment. So it is like this. Assume that you have a bill receivable, 100. Okay, you wanted money today. So what did you do? You went to bank. You got cash 90 and the loan 90. On maturity, the bill is honored. On maturity, the bill is honored. Then what is the entry that you pass? The entry that you pass. So on discounting, it is cash account debit 90. You received 90 and you have taken a loan of 90. On maturity, when bill is honored, bill honored. How? Now the responsibility is over. You are free from all the responsibility. The bill will go from your books. Clear? Loan will also go from your books and you will have an interest expense. How much interest? 10 rupees. This is your derecognition accounting. So you received 90, but you need not pay back 90 rupees because the bill has been honored. Bill is honored. So now the bill receivable will go out from your books. On maturity, bill receivable will go. And the difference is the 90 rupees is an interest for the loan taken. Is the interest for loan taken. Do you get this? Does this make any sense? Now you tell me which you feel is more appropriate, your old accounting or this accounting, which you feel is more appropriate, old accounting or this accounting. In old accounting, upfront itself you de-recognize. Here you don't de-recognize because you feel it is still responsible. You are still responsible. Tomorrow, if the other person does not make that amount, if the other person does not make the amount, then what is the journal entry? You will have to repay bank 100 rupees. Journal entry, what is the journal entry? If the bill is dishonored, you tell me, if the bill is dishonored, loan 90, interest, and you have to pay bank 100. You have to pay bank 100. The loan is de-recognized, and you will have a, now that is again this bill receivable and all will go, and you will have a debtors relationship coming into picture. Debtors relationship coming into picture. So this is in substance transaction. So we have to look into when should you de-recognize, when should you. What we are trying to explain is, sir, such greater emphasis given for what? Substance, not the legal form. That is the relevance of Ind AS. That is how Ind AS is different from accounting standard. So lot of things, whatever that we have learned in our 11th standard, 12th standard, foundation, your intermediate, everything we have to learn fresh. Everything will have to be introduced from the scratch. It is going to take time. It cannot be done overnight. Do you get that? Hence, we require that many hours to make you convinced why we are doing all this. Have you understood? So that is the explanation why, sir, why can't be done in say 100 hours. We can't do anything in 100 hours because amalgamation, you have learned in intermediate. I cannot take that. I'll have to teach you again amalgamation. Like this bill discounting, whatever you have learned bill discounting, we cannot learn the previous accounting. We have to teach you fresh what is bill discounting. Everything has to be taught to you from the beginning with journal entries so that you get a clarity about it. Tell me, sir, have you understood the discussion? So this is what I'm planning for the day. I'm not doing anything much. Just given a feeler of what we have to do. Have you understood? Are there any doubts? I can take your doubts. I can take your doubts. If you have any doubt, you can please unmute yourself and speak to me. Have you understood everything? What was discussed today? Is the speed comfortable? Is the speed comfortable? Is there any change that we have to do? Okay. If you're comfortable, we'll continue. The same way we'll be having sessions every day, morning. Sundays, predominantly, we won't have sessions. Okay. Otherwise, we'll be having morning, Monday to Saturday. Is that clear? And as already said, we'll try to ensure that by the end of this week, uh, I'll try to give you first module and the remaining modules by the end of this month. Okay. So the module will be uploaded into your e-learn platform today itself. You'll be able to see it. I think you won't be able to take a printout because physical copy will be made available to you guys. So for viewing, you will be able to see whatever on your against your login. So thank you. Have a good day.